Let's connect with the management of MAS Financial. It was a strong quarter led by healthy NII growth. Mukesh Gandhi is the co-founder and CFO of MAS Financial Services. He's with us on the show. Good morning and great to have you with us. Mr. Gandhi, to begin with, your profits have doubled. NII growth also has come in fairly strong, up a good 62%. What have been the key drivers for this kind of a performance? Is it sustainable?
Yeah, good morning, madam. And thank you for the comments. So basically, we had robust performance in this particular quarter. Now, if you look at the profit has doubled, there are the two reasons. We have grown at the rate of 30.36%. Our AUM has grown to that particular rate. And secondly, last year we went for an IPO and when we infused the capital to the tune of 360 crore. So because of that, our cost of fund has gone down by 150 basis points. So that is also one of the reasons why our profitability has increased and it has doubled in this current year.
Yeah, great set of numbers, Mr. Gandhi. Congratulations on that. I want to talk to you, apart from, of course, NII and profits, which you've already touched upon. I want to talk to you about the margins. What were the Q4 margins like? What drove them? And also, what's the outlook on margins going forward? How much do you see cost of funds as well as yields rise?
See, basically, if I take you to the NIM analysis for the last year, our rate of deployment, that is the yield, average yield is 15.77%, and my average cost of fund is 7.74%. That leaves the NII of 8%. And from that, the delinquency cost goes out, that is 1.35%, and my operational cost is 2.08%. That leaves the net profit margin of 4.6%. So if you look at the return on average asset, it works out to be 4.41%, and return on average AUM is 3%. Normally in our business, we are anticipating the return on average AUM to the tune of 2.5 to 2.75%, but because of this extraordinary year, we could get it up to 3%.
You have a high presence in the MSME and SME segment. While we're relatively seeing limited NPA stress, what are the key trends that you've observed so far in the various segments that you are present in?
Yeah, correct. See, last year, if you see the growth, our 30% growth mainly came from SME segment. SME grew at the rate of 35%. Micro enterprise loans grew at the rate of 30%. Two-wheeler loan grew at the rate of 27%, and commercial vehicle grew at the rate of 20%. So that results into the overall growth of 30%. Going forward, our main focus will be on MEL and SME, and they will grow above the average because we are anticipating to grow at the rate of 25 to 30%. So these two segments will be slightly above the average, and vehicle funding, that is a two-wheeler and commercial vehicle, that will be below the average.
Okay, so the two-wheeler funding, the vehicle funding may just be a bit tepid compared to the other segments. Mr. Gandhi, what can we expect when it comes to asset quality? Can the gross NPAs be sustained below 1.2%? And what's the provision cover that you will continue to maintain?
See, basically, if we look at that, not this year, but over last 20 years, we have maintained the asset quality excellently. Our GNP, gross NPA, always has been around 1.25%. Last year, it was 1.15%, and our net NPA was 0.91%. So we are the great believer that we are mandated to create the quality asset and not only to chase after the good. So it should be a sensible growth with the quality of the portfolio should be excellently maintained. Otherwise, whatever the growth we achieve it, that will get nullified because of the quality of the portfolio. And going forward also, we are quite confident that we will be in a position to maintain such quality of the asset because we are going for the calibrated growth. We, in spite of having sufficient capital, we are not accelerating our activities. We are going as per the manageable capability, and we are maintaining the quality of the portfolio in a range that I have told you that net NPA is always below 1%. Now, regarding the coverage ratio, currently the coverage ratio is 20%. But if you see that the coverage is a function of how much net NPA is left after the coverage. So if you look at it, even we have a 20% of coverage, the net NPA is less than 1%. It is 0.91%, and gross NPA is 1.15%. So, given the coverage, we are having the excellent quality of the portfolio, and then net NPA is around 0.91%.
All right, we'll wish you all the very best. Thank you for joining in and giving us a sense as to how the quarter has shaped up, and more detail into your financials as well. It's been a good quarter. The stock is higher by about 0.5% in trade right now.